February 1st, 2024. A lot of times when you get a spike like this and then you get a reversal, you'll get a measured move in the other direction. So you always have to be cautious of that. We got pretty close today on 42. We didn't quite test it. We did later in the day. But you always have to be cautious of that. I thought going into the day, there was a couple of important things. One, this was a pretty good bear spike, so it was likely to get a second leg down, which could have started here, but ended up starting here. And two, I thought that, at least this low was going to be a magnet because bulls bought here on this low. And if you bought and you scaled in maybe a point, you have a chance to get out at break even right here. But that's really hard to do, and most traders are not capable of that. So the vast majority of traders here ended up getting trapped. And those traders are looking for a chance to get out around break even at this low. And so if you were buying up here, you have to be really careful because you're buying right where there's going to be a bunch of bulls selling. So I think that rather than buying up here, it's better to wait and see what you get at this low. And then sure enough, you found a bunch of bulls selling at 42. So it's not unreasonable to buy the close of 40 and 41, but if you're buying up here, you have to realize that this magnet is right here, and it was yesterday, so it's really important, and there's probably going to be a lot of sellers here. So maybe better to see if you get one more bar breaking through that low. Bar one, a good bull bar closing on its high. It's good for the bulls, and the gap up is essentially another bull bar. So picture a bull bar here and a bull bar here. So it's good for the bulls, but probably a minor reversal considering how strong this is. Bad follow through on two, which is relatively expected, and an inside bar on three, which is a high one buy. Do you buy above three? I wouldn't. This is a tight trading range, so it's really not all that good. Outside down on four, but closing right on the moving average. It's a double top with two, and it was better for the bears that it closed as an outside bar, so that it's not still within the tight trading range. So we did break below the tight trading range, which is good for the bears. But I'm not sure how much further down we're really going to go here. The bull bar on one was pretty strong, and the gap up was decently strong as well. We should get a second leg down from yesterday's spike, but I think that it's better to look for a different spot. Inside bar on five. Do you sell below five? Maybe for a swing, but I think you're selling right on the moving average and you're selling a doji, and we're trying to break out of a tight trading range. So it's really not all that good. And if you get disappointing follow through like six, a lot of traders are going to get out. So disappointment on six, high two buy, or a high one buy, you could argue, or a high two, one pullback two. Outside up on seven, kind of a surprise on seven. It's a failed breakout below the low of the day. So I think it's not the most unreasonable buy in the world. It's okay to take, but you're probably not going to get the best follow through. And surprisingly, you do end up getting good follow through on bar eight. And when you get this good a follow through, what happens? Traders take profits quickly. They know that the traders who sold above the high of four and are willing to scale in are probably going to make money. So a lot of the traders, they'll buy, they have basically zero true risk, and they'll just scalp out. And then you get nine. 10, another inside bar, so you have an II pattern. Do you sell below 10? I don't think, I think it's probably an okay sell. We haven't closed below the moving average yet today. And you could argue some bears made money here, maybe made 5 points. So it's reasonable to sell 10, but you need to realize it's probably a scalp, and you're probably going to get disappointing follow through. And as you can see, traders who sold got disappointed in 11 and bought back their shorts, causing the rally on 12. So if you sell 10, it's kind of tricky management. I think if you're selling 10, you can't really get stopped out here. If you're selling 10, you need to either scalp quickly with 5 points, see that 11 is disappointing and get out, or you need to sell more higher above 11, expecting that it's going to come back to your entry price. But the worst thing you can do here is sell below 10 and then sit through this and get stopped out. 12, big bull bar. Something to notice is, well, a couple things to notice. 1, 2, 3. So it's 3 pushes up. It's a wedge. But these bull bars, look at 1, look at 3, look how strong these bull bars are. They're pretty good. So while we might sell off here, I think that it's, you have to keep in mind that it's probably going to be a trading range day if we do get a sell off. Disappointing follow through on 13. 13 is a wedge top, so I suppose it's a credible sell. Follow through on 14, but a doji bar, not all that great. And then a bear bar closing near its low on 15, getting better for the bears. We have 3 straight bear bars, or 3 straight bear closes, though they're not all that strong. And then better follow through on 16. I think 16 is a credible sell, probably the best sell out of these 4. Hoping for a breakout to the downside, maybe a measured move. You need pretty quick follow through, though. I think bears will get out above pretty much any bull bar at this point. And sure enough, you get really good follow through on 17 and 18. But I think when you see this, you start having to think about, look at how strong 1 is. Look how strong 7 and 8 are. Why are these bull bars so strong if this is going to be a big bear trend day? So I would be wondering about that as well. I just want to see something. 1 second. This was a credible buy, 23. So I just want to see where the midpoint was. It was right up there. So that's what 31 was racing to. I'll get there in a second. Big follow through 17, but a bit climactic at such a large bar. Some traders might start taking profits at 10 points. More follow through on 18, but a smaller bar. So momentum starting to wane, but still okay to be short, okay to sell the close. Bull bar on 19, so selling is starting to dry up. You know that the traders who bought below this low are probably going to make money, so we're probably going to get here. And traders who bought below the low of the day probably going to make money, so we're probably going to get there, which we do on 20. And then 21, low 120, swing sell, but bull bar, not all that good. And, failed breakout 21, so probably a trading range. Traders start to exit, and that causes 22. Bull bar on 23, 19 through 22 is a final flag. So tight trading range, final flag. And again, do you buy, I wouldn't buy above 22. It is a double bottom with 19, but I wouldn't take the buy above 22. But I think 23 is a credible buy. It's disappointing that it didn't quite break out of this high. But again, if you're willing to buy, you need to be willing to buy because, again, look how strong these bull bars are. They're really good. And that makes me think trading range day. And although it looks sketchy to be buying down here, you are buying low in the trading range, basically right at the lower third. So I think it's an okay swing buy. The problem is you're buying right at the open of the day, which in a trading range day is difficult to do. But I think credible buy of 23, betting this is a final flag, and that the traders who probably bought below 15 are going to be able to scale in and make money. Disappointing follow through on 24, so initially not a lot of buyers. And instead of exiting, we get a big bull surprise on 25. It's probably buy the close 25, I would imagine. It's a good bull bar closing near its high, and if you bought above 23 and you're still long, I think those traders will stay long. More follow through 26. So bulls can buy the close, 25, 26, 27, buy the close, but smaller bars, so not as good. But something to notice is that the channel from 22 to 27 at this point is really tight. So when you get a channel that tight, you can be pretty confident the reversal down is not going to be all that sharp. It was reasonable for bears to bet that they were going to get a lower high here. So the traders who they see 13 through 18, and you got to be thinking, well, we're probably going to get a lower high at least, right? Meaning that we're not going to get back above this high, and we're going to fail at some point and start to try and get a second leg down. But traders start to see how tight this channel is, 27, 28, 29. And so what's happening? Traders, excuse me. Traders see 30 and they see how tight this channel is. And there are a couple doji bars, so it should start to go sideways, but they're a lot less confident that they're going to get a lower high. And those traders end up giving up, and that's what causes a big bull bar on 31. Additionally, this was a reasonable buy the close bar, right? It wasn't great, but you could have bought this close and it was reasonable. And if you do a reasonable thing, 80% chance you're going to be able to buy again above a bull bar and get out around break even. So if you bought more above 23 and you had bought the close of this and you added on above 23, your break even price was right here on 31. So those traders who bought ended up getting out around break even during 31. You get more follow through on 32. This is pretty overdone. You're expecting disappointing follow through somewhat soon. You're getting big tails on the bars. So it's not as good as it could be, but it's still really good. But just expect disappointing follow through relatively soon, which you get on 33. Follow through for the bears on 34, but some bulls might exit below 33. It's probably a reasonable thing to do to exit below 33 or 34, but I wouldn't sell any of this. You could argue 31 and 32 is a breakout attempt above a bear channel, or above a bull channel. But one thing I would be confident in is the bears who sold this high and are willing to scale in are going to make money. And you can see on 44, they were able to make money. So those traders, they sold this high, they're scaling in higher, and they're initially trapped, right? So you initially have an open gap. After 2 legs down, you have an open gap. Is it all that great of a buy up here? Probably not, because this is so strong. It makes me think it's more likely it'll be a trading range day, but it's still okay to be long. So anyways, 33, 34, I think 33 profit taking for the bulls, 34 traders exit below 33, 35, a high one, but not all that good after this. Bulls want to reset the market cycle, which they did on 31 and 32, but they want spike, pullback, channel, and it's probably not going to happen. Second leg down 36, and then a doji on 37. Bears get 2 legs down. That's kind of what they were expecting here. And another doji 38. Bull bar 39. It's a high 2. You could argue it's a high 1, or you could argue 37 was the high 1. But sometimes I look at it as 1, pullback 2. So after 2 legs down, potentially high 2, 37. But it's more of a high 1 technically. You can buy, but I think you have to have a wide stop and be willing to scale in, because we could easily pull back all the way down here. And we could very easily pull back to this high. So I don't think a stop directly below 37 is all that great. 3 straight bull bars, 38, 39. Bulls start buying close, and you get a big bull bar, 40. But I think that we're just going to get a vacuum test of this low at this point. So some traders buy above 40, they get follow through 41. But it's always the strongest bars, the latest in trends, that end up being the traps, right? So you end up getting good follow through for the bulls, and then it trades right back to that low where bulls are waiting to sell, and they do, causing 42. So big outside down bar, 42. Disappointing, but reasonable to buy the close 41. So it kind of makes you think that we're going to get back to this close, or we're going to get a scale in bar where bulls can buy above and end up getting out break even. Big follow through for the bears on 43, but I think it's just bulls exiting, be flattening at the close, being disappointed. You can see there's a micro gap there, so a lot of traders exiting. And do you sell the close of 43? Well, if you're selling the close of 43, you're selling right on the moving average, so you know there's going to be some buyers, and you're selling right on the high of 13, so where we broke out. So there should be more buyers right there as well. So I don't think necessarily that selling below 43 is all that great, because you're selling right on this high where you know there should be buyers, and you're selling, like I mentioned, right on the moving average, wasn't that good either. Additionally, this bull move was pretty strong. It's probably consecutive buy climaxes, 1, 2, pullback 3, but like I said, I don't think it's all that great of a sell. So you get bad follow through 44. Any trader who sold below 43, disappointed 44, getting out during 45. And you can see the bulls who bought above 45, they bought the close of 42. They buy more above 45. And look where 47 ends up, 49 ends up, right at that 50%. So thinking about it, when you see 45, what are bulls expecting? They're expecting 2 legs sideways stop, disappointing follow through 46, but they're expecting a second leg up. They're not expecting a huge rally here. So more disappointment, 47, probably buyers below 46, since a couple good bull bars, bulls expecting a second leg up. 48, essentially a double top with 46, but not all that good, just a tight trading range. Tight trading range, you know that the breakout to the upside is probably going to fail as well. And so when 49 touches that 50%, those bulls end up selling, and that's what causes 50. 50, a test of the close of the 44 close. So the bears who sold the close of 44, disappointed in this, and they're getting out around break even during 50. 51, you could argue, I think it's a high 2. So, I would say 1, high 2. So I would say it's a high 2. You get 2 big legs down. 50 could be a bear trap. I think 51 is a credible swing sell. There's still at least a 60% chance. I would say at least a 50% chance that we're getting back to the 41 close. You're not sure when, but your initial risk would probably end up being somewhere down here or here, and that's around the close of that. And you get follow through for the bulls on 52, doji 53, 54. So you could argue this is the spike, and now we're entering the channel on 53 and 54. And then 55 and 56 is an attempted breakout of the channel from 53 and 54, trying to get back to this close, really, is what we're trying to do. So I think if you're buying above 51, you should be exiting, 60% of your position, maybe even more, all if you want to, all at the close of 41. You have zero true risk, and you're up, 10 points at this point? Yeah, almost exactly 10 points. So I think it makes a lot of sense for bulls to sell out around the 41 close, because look at how strong this is, right? These 3 bars, this is a strong bar, and this spike earlier in the day. So it's just really, I just don't, how much higher are we going, right? So what's your goal if you're long here? What are you expecting to get out of this? And it's probably a trading range day. So a lot of traders just going to exit at this high. That causes 57. I think too many bull bars to sell below 57, but it is a double top with 42. That's why you get disappointing follow through 58. But 57 strong enough for its own second leg, and really subtle. But if you bought the close of 56, and then you scaled in, 58, you were let out around break even. And that's why, some traders took a small loss because it only touched the price, it didn't go through it. But again, that's why that's stalling there. But I don't think 58 is a very good high one anyways. You're too high at a trading range. Bad follow through 59, 60. And then 61, a good bear bar closing near its low, but the reality is 57 needed a second leg, and now you have it on 61. You could argue 59 and 60 were it. You can see 60 essentially touched the low of 57, where the bears who sold below 57 disappointed 60. They ended up getting out. 62, a good bull bar closing near its high. Some always in bulls will buy. You can see bulls bought the moving average 45. They bought at 51, so they might buy at 62 as well. Follow through for the bulls on 63. Small bar, but okay. And then big bull bar 64. It's kind of a failed breakout of the high of the day, but enough of a bull bar that will probably get a second leg up from these, and you can just probably buy the close of 64. Big tail on the top. Disappointment 65. Do you buy above 66? I think if you're long, it's okay to stay long, but it's getting to a pretty dangerous area. I think that probably not too much left on the day. Follow through for the bulls 66, 67, but big, we're so high in this overall, and you're just high in the trade. You could argue 1, 2, 3. So it's really none of it's all that great at this point. It's a broad bull channel, and you're buying high in the channel. Disappointment 68. Some bulls might exit. You get 69. Then you start to form a tight trading range. I wouldn't worry about this. I think that this is a tight trading range. Once you see that, a tight trading range around 72, you can see we tried to get a breakout below. So we got a failed breakout above the tight trading range, 75, and a reversal down. Bulls exit. Hopeful by the close, bulls were buying, hoping to get a strong breakout and trap the bears. But you can see the bulls end up being the one who traps. So some bears sell below 75, get followed through 76, but then a failed breakout below the bottom of the trading range, which is the 69 low, the 66 low. Failed breakout during 77, and bulls, the same way bears sold here, bulls buy here, and they just happen to get really great follow through, which is pretty rare. For stop orders on the day, probably kind of a lot of them. I thought you could sell below 10, but probably got to find a way to get out before you get stopped out. I think 16 is a good sell. 17, 18, you could sell to close those bars. Bears probably exit above 23. Bulls can buy above 23, or they can buy the close 26, 25, 26, 27. Probably all okay. You could buy the close of 31, 32, technically, big bull bars. Big bull surprise, probably enough for a second leg up and resetting the market cycle. But I think bulls exit below 33. I don't think you take a sell here. You could argue we're probably getting back to 13 high, but it's a pretty thin argument with how strong this is. And it's not, you're probably going to get 2 legs sideways to down below 33, but I'm not sure how much lower we're going to go. By the close, 40, 41. But again, this low, really got to be cautious if you're buying that high. And, again, it's a trading range. I think it's a trading range with this. So the best looking bars are usually the highest in the trading range where you need to get out. 51 is probably a good buy. Buy the close 52. But anywhere up here, you're probably, again, the best looking bars right at the magnet where bulls are going to sell. 2 legs sideways to down. You can buy 62, 63, 64, and you get, at the end of the day. On the daily chart, a big bull bar closing near its high for sure. It's essentially, it triggered the high 1 above yesterday. A couple of really big days, right? So a couple of really large days. I thought we might have to get back to this low because bulls bought below it, and they're probably going to get around break even. But this is a bull channel. This is a bull channel at this point. So I don't think that it's the best buy above this. My overall point being, I think the bulls who take this buy are going to end up being disappointed with the follow through they get because it's big bar, big risk, high trading range. So, or what's probably a developing trading range, but high in a bull channel. So, I don't think that the bulls who take this buy are going to be all that happy with the follow through they get tomorrow. And I think we'll probably end up getting back to this high at some point. On the monthly chart, the bulls, I think I mentioned that I thought they were going to get kind of a big tail on the bar, and they did. So, this really isn't that great for the bulls. I think this is a trading range, and I think that we're in a trading range. So, I don't know. We might get another big bull bar. It's possible, but I generally think we're going to get disappointing follow through. I think this month we're going to get back to this high. And I think we're probably going to close this gap. I don't know, probably not this month, but I do think we're going to close this gap and get back to here and all the way back to here probably too, and form some sort of trading range. So I'll be interested to see what we get. It could be 1, 2, 3, some sort of wedge forming, some sort of third push. But overall, just look at this. This is a strong bull trend, right? Does this also look like a strong bull trend? Not really. So I think we're probably going to get a deep pullback. And yeah, that's the day.